Hello viewers, in this video I'll be going over natural gas ETF ticker symbol UNG. Today we are up 2.6% on the 1 hour chart. We were touching overbought RSI, however we diverted and head down lower. We also see a divergence on the MACD on the 4 hour chart. We approach positive MACD, that's a good sign, and we see a large spike in volume compared to past several days, so that is a positive sign that this uptrend, or I should say natural gas, is not entirely in the downtrend at the moment. And as we see here, we see a convergence on the daily MACD, and as in the 4 hour chart, the large spike in volume. And at the moment we see a resistance at the 50-day moving average, and I do see that as the next resistance at the moment. We do need to break above that around the price of $20.40, and I'll mark that as our first resistance. And as for support, the next support that I see is where we left off back in October 3rd and October 11th, and that also coincides with prices, or a price concentration that dated back to July and August. So that is around the price of $18.90. So if we were to move on higher, that price movement is roughly around 2.6% to the upside, and to the downside is roughly 5.5% to the downside. So let's head to the forecast model. So this forecast model is now available in the link below. You can check your own stocks, and this is for free, so check it out in the link below. So back to the forecast, we're going to analyze natural gas day by day. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these forecast models we should focus on? Ideally the model that is the best match to the current trend. We have the current trend right here, and below is a trend that I believe is the best match, and this dates back to April 30th to July 27th, 2010. So let me point out why these two charts are similar. So what we have in the start of the current trend, we started off touching the bottom Bollinger Band, and then we proceeded to make a nice uptrend averaging above the middle Bollinger Band. And then next we proceeded to break down to touch the bottom Bollinger Band once more. After that, we made a nice sideways price action, eventually touching the upper Bollinger Band right towards the end. So we have those points. So we start to see similar pattern shaping, and we see it touch or start on the bottom Bollinger Band right at the beginning. Next we see the uptrend averaging above the middle Bollinger Band for several days. Once more touching the bottom Bollinger Band. And then finally, right towards the end, we see it touch the upper Bollinger Band. So we have about 1, 2, 3, 4 points. We also have 1, 2, 3, 4 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. The model that we just examined was, let's say, April 30th to July 27th, 2010. Back then, natural gas was down roughly around 1%. So after touching the upper Bollinger Band, we may see it get rejected and revert back to the middle Bollinger Band, or back to the mean. So we see that price action in the trend that we just examined, and I do see the next movement is around the $19.60, so that is to look forward to. And this forecast model is now available in the link below for free, so check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.